Okay, so this is actually preparing the trial balance, and preparing the trial balance is actually a relatively easy thing to do. And in the real world, you do the trial balance, and then from there you do the adjusting entries, and then you do an adjusted trial balance, and then you do the financial statements. So we haven't learned how to do adjusting entries yet. That will be the next chapter. So for us, we will go from preparing a trial balance to doing the financials. You would do the financial statements from the trial balance, but we're just going to be preparing the trial balance. Okay. So the trial balance is a list of the accounts at the end of the period. It's in a given time, but it would be the end of the period. You do it when you're getting ready to do your financial statements. And the accounts are listed in the order that they appear in the ledger. So I'm going to give you like a specific order that you need to list the accounts in. And the purpose of this is to prove that your debits and credits equal, because all along we're debiting something and crediting something. Could be more than one debit, more than one credit, but the debits and credits always equal. So it might show us, like if our debits and credits don't equal, we made some kind of a mistake somewhere. So it can be one clue in order to help us to find mistakes. It might help us to find journalizing mistakes or posting mistakes. And it's a useful way to do the financial statements, because instead of flipping through all the T accounts, we just use that trial balance to create the financial statements. Okay. Now, it doesn't uncover all of the possible problems that you can have, but it might alert you to some possible issues within your accounting. Okay. Now, the order of presentation of the trial balance. This is the order that you put the items in: assets, liabilities, stockholders' equity, revenues, then expenses. And I'll go over that again when we do the actual problem. Okay. All right. So this is an example of the trial balance that's in the book for us, which is based on that Sierra Corporation, which has been the sample problem that we've been looking at through the whole class. Okay. So we've got the assets: cash, supplies, prepaid insurance, equipment, right? Assets. Then we have the liabilities: notes payable, accounts payable, unearned service revenue. Then we have the stockholders' equity, common stock, and the dividends. Then we have the revenue. Then we have the expenses. Okay. And you'll see that the balance is either a debit or credit based on the T account, where the balance shows on the T account. And you'll see here on the bottom that the total debits and the total credits do equal one another, which is $28,700. Okay. So the trial balance may balance even when a transaction is not journalized. So if you forget to journalize a debit credit transaction, it's still going to balance. If you forget to post a part of a journal entry, a transaction is not, if you never journalize the transaction, so you pay a bill and you never put it in your journal, or a correct journal entry is not posted, so you did journalize it, but you forgot to post it to the T accounts. If you do a journal entry twice, it's still, the debits and credits are still going to equal. If you use the wrong accounts, but you debited something and credited something equally, it's still going to equal. And if you do offset errors, so like if you accidentally overpost something $25 and underpost something another $25, okay? So those are kind of the limitations of the trial balance. All right, so we are going to stop there, and then we're going to work on a trial balance problem.